Hello there, good day. Today, we are going to discuss on the forms of business organizations. Okay. So there are three forms of business organizations. First is the sole proprietorship. The sole proprietorship is a business owned by one person and operated for his or her own profit. Next is partnership. Partnership is a business owned by two or more people and operated for profit. Third is the corporation. A corporation is an entity created by law owned by shareholders. Okay. We are going to focus our discussion on the third form of business organization, which is the corporation. Corporations may either be privately owned or publicly owned. Privately owned corporations are often owned by family members whose stocks may not be offered to outsiders unless consent by the family members is secured. Companies which are publicly listed, okay, are owned by unrelated investors and are traded in organized exchanges like the Philippine Stock Exchange. Okay. While there are many stockholders, there is generally a group of investors or a family which controls each listed company. Price of stocks of listed corporations are driven by several factors, such as the earnings of the companies, the prospects of the industry where these companies operate, the general market sentiment, and the economic prospects of the country, among others. Okay. All right. So for example, you are a shareholder. What would be your objective? Of course, your objective is to maximize wealth, be profitable, have lot of cash. Okay. So how do we measure shareholders' wealth? Example, I am an investor. I am a shareholder. I bought 10 shares of ABC Telecom at 2,500 pesos per share on October 10, 2020. This brings my investment to 25,000 pesos. Now, what happens to the value of my investment if the price goes up to 2,600 per share? My investment would now become 26,000 pesos. Just imagine, if I bought the shares of stock at 2,500 per share on October 10, and on October 15, just a matter of 5 days, it goes up to 2,600 per share. Therefore, I earn a profit of 100 per share. So a total of 1,000 for the 10 shares. Now, what happens if it goes down to 2,300 per share? That brings my total investment to 23,000 pesos. So it's a loss. Okay, if I am going to sell my shares, I would have a loss of 2,000 pesos. So what would be my remedy? I will just leave it there and wait for the time that the price of the share will go up. Okay. So shareholders' wealth is measured based on the current market price of the stockholders' stocks. So the market price changes across different periods. Hence, the value of your investment changes in different points of time based on the market value at that time. So, what are the factors that influence the market price? Okay, we are going to group them into two. We have the controllable by management and uncontrollable external factors. Okay, first, let's discuss on the factors controllable by management. First, we have the profitability. A profit is a measure of the financial performance of a company for a period of time. Although it is a major driver for increasing the value of stock, an investor should not rely on profits alone. Why? Because it is possible that a company has profits, but its cash flows is negative. Okay. Next, we have having a good liquidity and reasonable leverage position. Liquidity and leverage refers to the company's management of the type and amount of assets and liabilities that it will hold in the course of its operations. Dividends. Holders of shares receive dividends from a corporation as return on their investments in form of cash or other properties. Companies which have better dividend policies are generally more attractive than companies who do not pay out dividends. Okay? Note that there may be times that companies do not pay out dividends because of future expansions. Same with the other factors affecting share price, dividend policies, which should go hand in hand with other factors in determining market price. Next is the competent management, which affects the company's operating efficiency. So competent managers may have any of the following attributes. Okay? They should be visionary. They should be decisive. They should be people-oriented. Should be inspiring, innovative, respected, and experienced or seasoned managers. Okay. Another one is coming up with corporate plans that improve the business prospects of the company. Okay. This one, for example, Company A, which is in the business of selling tempura in the boulevard of Dumaguete for 5 years. Okay? So this company is consistently earning profits and has a positive cash flow. When asked how Company A sees itself after 5 years, so Company A answered that it would continue to sell tempura in Boulevard of Dumaguete. On the other hand, here comes Company B. Company B is into selling of buko juice. Okay, buko juice along the Perdiz Street in Dumaguete City for 5 years already. Company B is consistently earning profits and has a positive cash flow. When asked how Company B sees itself after 5 more years, Company B answered that it has generated enough cash to expand its business to other areas in Negros Oriental. Okay? Not only in Dumaguete City, but also to other municipalities or other cities in the island, to take advantage of the growing demand of buko juice. Okay? So between the two companies, Company A, the tempura business, and Company B, the buko juice business, which would be a better investment? Of course, the Company B, since it has more concrete future prospects, allowing investors to hope for better revenues and net income. Now, let's move on to the uncontrollable external factors. Okay, these factors influence the general reaction of investors in making an investment decision. So, the macroeconomic conditions, the political stability, the prospects of the industry where the company operates, the general market sentiments. So its effect is not only to a specific company, but on all companies or a group of companies under similar circumstances. Okay, these factors, right, are a result of the environment a company operates in rather than the decisions of the company's management. And also, the flow of foreign funds invested in the Philippine stock market is one of the uncontrollable external factors. Okay, now, given the factors that influence market price, how will the company ensure that the objective, which is again to maximize profit or wealth maximization, will be achieved? This is through financial management. So what is the role of financial management? Financial management deals with decisions that are supposed to maximize the value of shareholders' wealth. These decisions will ultimately affect the market's perception of the company and influence the share price. The goal of financial management is to maximize the value of shares of stocks. Managers of a corporation are responsible for making the decisions for the company that would lead towards shareholders' wealth maximization. Okay, thank you for watching. All right, I hope you learned something of the forms of business organizations, especially on the corporations.